Dividends are a crucial part of long-term success in investing.
Answer is I do believe in dividends.
I can't even imagine buying a stock that doesn't pay a dividend. Why would you do that?
From Warren Buffett's portfolio and Kevin O'Leary's ETF, we can tell that many of them rely on dividend-paying stocks. From one of the best ETFs in 2022 and one of the highest paying, we're going to talk today about the top 7 ETFs to consider in your portfolio for 2023. But first, why ETFs? After completing a poll in the community tab of the channel, we found that most people want to talk about dividend-paying stocks and ETFs, and this is exactly what we're going to cover today. But why ETFs? Well, ETFs allow us to employ a strategy amongst a wide variety of different stocks and implement that strategy ongoing. For example, if a stock no longer meets the criteria we have set, the ETF will automatically sell it based on the criteria the ETF has. It requires us as individual investors to do nothing. Additionally, ETFs allow us diversification. Each ETF can hold more than 100 different stocks, and when certain stocks fall out of favor, the ETF will automatically rebalance and kick those stocks out of there. But like everything, not all ETFs are created equal. It's important to know how the ETF chooses the stocks it purchases, how it makes its decisions on how and how much to buy, and of course, when it rebalances. Today, we'll be going over the 7 of the best high dividend ETFs to buy in 2023. And we'll start off on a quite popular ETF here on YouTube and possibly the best rank ETF in 2022, Schwab US Dividend Equity ETF, ticker symbol SCHD. SCHD is a great choice for dividend investors looking to target large cap US equities with strong fundamentals and sustainability of dividends relative to their peers. Its top portfolio holdings include Broadcom, Verizon, Cisco, Texas Instruments, and BlackRock, and it has a total of 104 stocks. Plus, it has a very low expense ratio of just 0.06%. Finally, SCHD inclusion criteria means that all stocks must have paid dividends for at least 10 consecutive years before being included in the index, which helps ensure sustainability in the ETF's overall performance, something that dividend investors should be particularly interested in. SCHD currently pays a dividend yield of 3.31%. Next on our list, and an ETF that focuses on overseas investments, we have iShares International Select Dividend ETF, IDV. IDV is a great way to diversify your portfolio and capture international dividend stocks. It provides exposure to some of the world's best companies, many of which pay higher yields than US-based equities. IDV has a low turnover rate and tracks high-quality dividend stocks from around the world. Now, turnover rate means how often securities change within the ETF, so a lower turnover rate means that the companies that they choose rarely go out of favor. The ETF holds about 129 international stocks, giving you access to global markets that may have better returns than domestic ones, especially during periods when the dollar is weakening. IDV is great for investors looking for additional income and want greater diversification within their portfolio by accessing non-US high-quality dividend-paying equities with attractive yields. IDV has a current dividend yield of 6.28%, making it one of the highest yielding funds in its category. Next on our list, and a member from Vanguard's offering, is Vanguard High Dividend Yield ETF, ticker symbol VYM. VYM is a great option for dividend investors looking to diversify their portfolio by adding an ETF that offers exposure to 443 of the highest yielding stocks in the US. This extremely broad diversification of over 400 securities allows the fund to be more defensive than many other funds that just focus on 1 or 2 sectors. VYM also has a very low expense ratio, coming in at 0.06%. With the combination of low cost, broad diversification, and strong performance during market downturns, VYM could be a good fit for many dividend investors' portfolios. With dividends reinvested, compared to the Vanguard ETF, which tracks the S&P 500, VOO, VYM was only down 0.4%, while VOO was down over 18% in 2022. VYM has some other advantages as well because it is a much higher liquid fund. This means that when you buy shares of VYM, you can do so with the confidence knowing that your order will be filled quickly and at a reasonable price point, regardless if the markets are up or down. This makes buying into this fund much less risky compared with smaller ones whose price may fluctuate wildly due to lack of investor interest. Currently, VYM pays a dividend yield of 3.8%. Next on our list, another ETF from Vanguard. We have Vanguard Dividend Appreciation ETF, ticker symbol VIG. Now VIG is a great choice for investors who want to focus on stocks with consistent growth. The ETF is also very large with a portfolio consisting of 289 large cap US-based companies, offering exposure to one of the most reliable dividend grower group in the market, including those of United Healthcare, Johnson & Johnson, Microsoft, and JP Morgan. Now VIG has a lower yield than some of the other funds, but makes up for it with its strong growth metric, such as 16% earnings growth rate and 24.8% return on equity, which both are significantly higher than the industry average. Plus, it offers that really low expense ratio of just 0.06%. Currently, VIG pays a dividend yield of 1.89%. Next on our list, the king of dividend growers, we have ProShares S&P 500 Dividend Aristocrats ETF, ticker symbol NOBL. NOBL is a great ETF for those looking to invest in the dividend aristocrats. Not only does it offer exposure to some of the most resilient and profitable stocks on the market, but it also offers an equal weighted approach that helps diversify risk across all of its 65 holdings. There are many variants of the aristocrats ETF, ranging from how often they rebalance to how much of each stock they buy. So make sure you know which one you're buying. NOBL has a low expense ratio of 0.35%, making this a great option for investors who are looking to generate income to their portfolio while keeping costs down. NOBL's current dividend yield is 1.99%. Next on our list, we have one of those variants I was talking about, the S&P 500 Global Dividend ETF, ticker symbol WDIV. WDIV has a well-diversified portfolio of stocks from around the world and pays a decent yield. The ETF is ideal for dividend investors who want to diversify their portfolio across different countries and sectors while still receiving an attractive income stream. Plus, it has a very low expense ratio of just 0.4%, which is relatively low compared to other global dividend ETFs on the market today, especially considering it has a broad holding of 117 different stocks. Overall, WDIV makes an excellent choice for those looking for global diversification and a steady stream of income without having to pay too much in fees or expenses. With its broad exposure to international markets and a relatively high yield, it's definitely worth considering as part of your overall investment strategy. Currently, WDIV pays a 6.36% dividend yield. Last but not least, and the highest paying ETF on our list today, we have Global X Super Dividend ETF, ticker symbol SDIV. Like most of our number ones, this ETF comes with a little bit of risk to drive this incredibly high yield. SDIV invests heavily in emerging markets and provides exposure to sectors such as financials, real estate, and materials. This ETF has an expense ratio of 0.58%, which is considerably higher than some of the other options in the market, but it does create a 13.21% dividend yield. Remember, high yield usually means there's some component of risk, and this ETF definitely has some. It mainly looks for high income in emerging markets, so it doesn't have any of those screeners looking for sustainable dividend or any large cap companies. So many of the components of this ETF are micro caps and small caps, very volatile stocks. So with that said, we'll see you in the next video. Click here if you want to learn more about dividend investing and our how-to dividend 101 playlist as well. We'll see you there.